Hello and welcome to the stock market analysis. The title of my lecture today is The Art of Trading Breakouts, Long Consolidation Breakouts. So this is part of the Trading Strategy Mastery series where I'll be teaching you an effective breakout trading strategy for profitable results. Now, first of all, let us deal with why you as a trader want to trade breakouts. The number one reason is that it's quite easy to spot a breakout actually. The stock just trades sideways for a period of time. Sometimes it's short, sometimes it's long, but it's easy to spot because they are in a range. And then the second thing is that breakout offers great risk to reward potential. Sometimes you can get 5 reward to a risk, and sometimes even 10 reward to a risk. It's not a lie, it's not a joke, but quite a lot of breakouts, they do offer you good risk to reward. So for example, you risk 10,000, you can make 30,000 or even 50,000, because when a stock break out, they can actually sometimes go very, very high as well. And because of that, you don't need a high winning percentage to be profitable, even if you're 50-50 correct. It's half correct. Can you imagine being half correct of the time and still be ahead, right? Still make money in your account because the risk reward is very good. So if you like this kind of learning about trading strategies and so on, this is part of the trading strategy series I'll be doing. Do like my video and subscribe to my channel so that you'll be one of the first to know when I release a new video about the trading strategies. So let's continue with this lecture. Now, what is a consolidation? What is a consolidation? This is what it looks like. The stock goes up, down, up, down, up, down, up, down, and then eventually squeezes and breaks out higher to form a breakout. So this area here, you can draw a trend line, upper trend line, lower trend line. This whole area is a consolidation or a trading range, but eventually the stock will either break out or break down. If it breaks out, we want to buy it and put a stop loss below. And that is how we trade a breakout. Let me just give you a preview of what you're going to learn. This is the stock of Goldman Sachs. By the end of this lecture, you'll know how to buy here and write stock higher. So there will be quite a lot of examples as well, like NVIDIA, PRCT, Goldman Sachs, TPC, Toll, ERJ, and VRT. We're going to look at some of this screenshot of these stocks, and later I'll go to the charts using a charting site. Now, long consolidation breakouts are not like a short consolidation breakouts. The consolidation should last more than 2 months or 8 weeks of trading, because we want the stock to really trade sideways before breaking out. And they're actually quite tight. They don't go all the way from 50 to 100 and then down to 30 and then down to 70. That is not a consolidation. We want the range to be quite tight so that it's a real consolidation. And once the stock breaks out, this consolidation can actually act as a very strong support. And when the stock drops to the area, we can actually, some traders do actually buy the pullback before it goes higher again. So that is something that you need to take note of. So how to trade the long consolidation breakout? First of all, we must identify an area of consolidation, which is about 2 months. Also, you should make sure that the stock is in an uptrend. There's a prior upward move, because we want to trade with the trend. The trend is your friend. So if a stock is in an uptrend and we buy the breakout, the odds of it moving higher is very, very good. The third thing is you must make sure the stock is trading above its rising 20 moving average and 200-day moving average. Now this is to ensure that it's short-term bullish and also long-term bullish. You want the stock to be short-term bullish, long-term bullish, and that is where a lot of power breakout are going to happen. Then we buy the breakout and put a stop loss below the entire consolidation. So this is an example which I showed you earlier, Goldman Sachs daily chart. You can see that the stock has been trading sideways for quite a long time, about mid-December to mid-March. And you can see that the 20 MA is actually curving up, and the 200 MA, which is this yellow line, is also rising. So this 20 MA that is rising and the 200 MA that is rising tells us that we should be bullish on the stock short-term and long-term. So you draw a box over the entire consolidation, you buy the breakout, and then you put stop loss here, right below the consolidation. Look how the stock reacted. It went up now, and then it dropped. Remember, a consolidation once broken out becomes a very strong area of support, and the stock eventually move higher, and outside is going to continue to move higher from there. Here's another example, Toll Brothers. The stock has been trading sideways for quite some time, over a period of 2-3 months, and eventually broke out of this consolidation. You can buy the breakout, put the stop loss below entire consolidation, and ride it higher. Right? This is going to give you very good reward, risk to reward ratio. And look, as it breaks out, the 20 MA is rising, the 200 MA is rising. Whenever you see the 200 MA rising, it tells us that the stock has opportunity to go up long, right, by quite a long time, as compared to here where it's declining, which means it's not good, but eventually it flattens out and move and rise. This tells us we should be long-term bullish. Now, how do you take profits in your trade? With breakouts, you must always let your profits run, because we want the risk to reward to play out. Now, a stock that is strong will rarely drop below its rising 20-day moving average. So we're going to take advantage of this knowledge. We're going to take advantage of the 20 MA, and we're going to sell half of the stock when it drops below the 20 MA decisively. And then we're going to sell half of it when it drops below a swing low. Right? Simple. It's a very simple trend following strategy using the 20 MA. Now, if you have enjoyed the education, this lecture so far, do subscribe to my channel if you haven't, because I'm going to do quite a lot of this trading mastery and strategies, and you don't want to miss out on that. So let's take a look at the same example, Toll Brothers. We buy the breakout, put a stop loss, and look, this stock has been going up and up and up, and here it dropped below the 20 MA moving average, but because it's so near to your buy point, you don't want to take profits yet. And then it rise. Here, intraday, it dropped below the 20 MA, but it didn't drop below it after the closing. Continue to rise until here when it dropped decisively below the 20 MA. That is when you sell half, and this is a swing low. And when it drops below the swing low here, you might want to sell the other half. But sometimes, if the stock is very, very strong uptrend, you might just decide to keep the other half and see what happens, and raise your stop loss to break even, your buy point, so that you have a free trade, right? Even if in the event you get stop out, your stop loss is at break even. Now I'm going to show you some chart examples from Bitcoin, from gold, and then here are stocks examples. So Bitcoin is cryptocurrency, gold is commodity, and here are stocks. Now this shows that this trading strategy actually works across many different markets. If you learn this one trading trading strategy, you can apply it in many markets. Right, the first chart we're going to look at is gold. Can you see gold rising a lot here? So this is daily chart of gold. October it bottomed and then it rose up. So here is a previous move up from 1820 to about 2000, and then it traded sideways for quite a few months. Eventually it broke out of this consolidation. Note that at this moment the 200 MA is kind of rising, and here we have the 20 MA also trying to rise, and you can buy the breakout here and ride it higher. You can sell around here when it break below the 20 MA, put a stop loss here. Now there's another green box here. This is another lecture titled The Art of Trading Breakouts, 20 MA Consolidation breaks out. You might want to check the video out because I'll teach you how to buy here, put a stop loss and ride it higher as well. I'll put a link in the I'll put a link below one of the videos. Now let's take a look at Bitcoin. Alright, Bitcoin US dollars. What is happening? Alright, do you see the sideways trading? Now if you can't, that's because we're in the wrong time frame. Let me just show you. This is the weekly time frame. Now remember I told you the consolidation must last 2 months or more. Each bar here represents 1 week of trading. Definitely here, the trading here to here is more than 8 weeks. So what you can do is you draw the box, and here you go. You can buy the breakout, put a stop loss. Remember the 20 MA is also rising, 200 MA is also rising. So weekly 20 MA and 200 MA should be rising as well. It's where you buy the breakout, ride it higher, stop loss is here. Do you still take profits yet? No, because it hasn't dropped below the 20 MA. So you're still in the trade. Those who took it might want to raise your stop loss at least to break even. So Bitcoin, great. Now let's take a look at some stocks. Here is Tutor Perini. Well, you can see the stock here, where is the sideways movement. First of all, the stock rose here and then traded sideways. Here is your sideways consolidation. Breakout, you can buy it, put a stop loss, right? Rising 20 MA, rising 200 MA. Let's take a look at ERJ as well, another example. So, can you spot the consolidation breakout? Here we go. Trading sideways for more than 2 months. 200 MA was rising. It has a previous move up, already in an uptrend. As it broke out, the 20 MA also rising. You can buy the breakout here, put a stop loss here, and yep, all the way rise. Took your first profit here. Hasn't broken below this swing low, so you're still in the trade, half of it. So you see in this example how important it is to let your profits run. You already took half of your profits here, and half of it is still running, moving higher. Now VRT, another stock example. This stock has been going on and on and on. Where is the rectangle? You might want to pause the video and look at it. Alright, I hope you have paused the video and searched for the rectangle breakout. Here it is. More than 2 months of trading. If you can count here as well. Rising stock, rising 20 MA, rising 200 MA points to long-term movement in the stock. Buy here, put a stop loss, ride it all the way higher. Right? Very good. Alright, here's another example. You might want to try find the rectangle, the consolidation with me. here it is. Alright. Okay, actually this whole area, you can, right? 200 MA is rising. Previously it rose from here to here, so it's already in an uptrend. As it broke out, the 20 MA also curved up by the breakout. Put a stop loss here, ride it higher. Stock is still in progress. I haven't sold any of it yet because if you're in the trade, the 20 MA is still above, below the price. Stock is still above the 20 MA. Alright, here's a bonus. It's NVIDIA. Can you see that it was trading sideways above the rising 20 MA and 200 MA? You buy the breakout, put the stop loss here. This is a weekly chart, and you can actually work out of a weekly chart. So do pause the video and study it for yourself. Well, here's conclusion. You have now learned a trading strategy that follows the trend. It is a strategy, a very good risk to reward. And I hope you learned something new. Do paper trade this trading strategy until it's profitable for you. So if you have enjoyed this lecture, you've learned something new, do subscribe to my channel, like the video, and I'll see you in the next trading strategy.